Alrighty. Hello, folks. Let me just check if this is running. Yep. Okay. Welcome to the weekend video. This is Enda here from bullwaves.org. Obviously, because you know me already. So let's just cut to the chase, get right into it, and let's talk about the dollar. People might think that I love the dollar, but I don't love the dollar. I don't love the euro. I don't love the yen. My love is retained for other things, not paper currencies. But I am not a long-term bear on the dollar. The main reason being because everybody's a long-term bear on the dollar. So what I am willing to concede here is that there may be another leg in euro dollar that could push us above 21.2561. Now, I know during the week that I've been counting a turn in dollar, and that's still very much a real possibility. I mean, we could have a failed C wave of wave B here. So this is wave A up into 2018 high, wave B down in 2020 low, and then wave C up into the 2021 high. So we've got a three-wave move. Wave C could be topped out. It could be topped out already. I would not be against that at all whatsoever, but I have to be open to the possibility that that we might fill that, let's say that's gap that's above us here, this wave A high here at 125.60. So I'll get into the short-term chart, excuse me, and I'll show you what I'm talking about there at closer detail. The main reason so far is that we have a pretty clear three waves decline. Now, this could be an expanded flat that's rolling out here, but we have a step higher this morning. This is Friday morning here over in Ireland. So it's the middle of the night. What time is it over? It's probably 5 a.m. over there in the US, or in the East Coast anyway. Good morning if you're up in New York. It's time to get up anyway. 5 o'clock. Why would you be sleeping after that? I'm not allowed to sleep after 5:30, so you should be up. Okay, so let's get into this. If wave C of wave B here is already topped out, let's get into the short-term chart and we'll show you what I'm talking about there. This is a 4-hour chart. So we could have wave 3, 4, and 5 topped out, and the main reason I am contemplating that 125.60 possibility is we have a three-wave decline overall from the high. So that's the kind of let's say the interim kind of neutral stance that you might be forced into. Here's the hourly chart. You can see that I'm counting 5 waves down in wave 1, and then a long expanded flat wave 2. Well, running flat at the moment. Wave A up, wave B down, wave C up. And we do have 5 waves up in a possible C wave. And the main reason I've been pushed, even this week's decline did suit the bearish count. But what we've had in the futures, the overnight trade and the early morning trade is a spike higher. This could all be part of wave 2, as I'm showing here. Or we have a larger second wave in blue here, tracing out. So we could have wave 1 down here. And then we'd be tracking 1, 2, 3, 4, and 5 down into wave 1, and then a larger second wave. So that'd be A, B, C up in wave 2. That'd bring us up to about 122.50 maybe. And then we decline into a third wave. So there's a couple of scenarios here that may kind of thwart the immediate wave count that I do have. I'm willing to let this play out here for the moment. 121.69 is the cutoff point for the immediately bearish wave count. If we get a reversal lower again this morning or this afternoon, let's say, especially if we break 120, that low there, 120, what is it, 23 at wave 1. Then I think we're pretty much on course for another decline into a third wave. But that invalidation line there, 121.69, is right above us now. So I'd have to watch that over the next couple of hours and see, does it rule out the wave count that I've been working with throughout the week. But anyway, apart from that, I think odds on that we are most likely turning in euro dollar, topping in a second wave, heading down into a third wave. Like I mentioned on the daily count, there is that 125.61 level that is still harkening above us, and the action next week will define whether we push to that level or not. On the hourly chart here, if we break below this, the recent extreme low, that's 119.52. If we break that level, I think then we're pretty much assured that we will head down into a third wave. Okay, let's get on. Pound dollar has been just eking out new high after new high this week, and I have to say that it has pretty much flummoxed me. I'm just going to have to wait and see what happens here. You can see here in the 4-hour chart that there's nothing particularly impulsive about the action over the last, let's say, 3 months almost. It's just been this kind of solid grind to the upside, hence the reason I have been favoring kind of an ending diagonal scenario, and that still is the main, let's say, play on the cards here. It's been an impossible market, pretty much trade anyway, so there's been nothing like spectacular about about cable. You get into the hourly chart here, you can see that this ending diagonal is 3 waves up in wave 1, 3 waves down in wave 2 here, and then this kind of expanded third wave up in wave 3, and 3 waves down in wave 4, and then we may have either wave, let's get that back in there, either wave A, B, and wave C is tracing out 3 waves up, or we have a smaller wave A and B, and what we are doing here is another expanded wedge pattern in wave C. Yeah, it's a tough one. I'll grant you that. There's nothing else really on the horizon here for cable other than this particular wave count. I don't see anything else impulsive working here in the background. Excuse me, I have a bit of a cold brew. I probably should have taken some antihistamines, but that's the way it goes. Just have to wait and see. We had that kind of slide lower, but it was nothing convincing about those previous move lower, and obviously we've retraced them. And again, there's been nothing particularly convincing about any move higher or any move lower over the last, let's say, 2 months at least anyway. So how do we stand on momentum? If this is a C wave top, well, we're pretty on the daily. We've flatlined at a lower high. On the 4-hour, we've turned off a lower high, and on the hourly, it doesn't really matter. We've topped out at an extreme on the hourly, but the longer term momentum suggests that this rally is dead, even though we seem to be peaking to very slight new highs over the last week. We'll see. I just have to wait and see how this if the turn in dollar yen that's underway and euro dollar that is underway will kind of bleed into the cable market eventually. So let's see how that goes. Okay, so here is dollar yen. Here's that pattern that is tracing out in dollar yen. It's a pretty impulsive pattern. I've been kind of looking also this week at the possibility of a larger degree wave 1 up here. I think I mentioned this over the last couple of days. Maybe we've got 5 waves up At the moment, I'm still kind of favoring the idea that it's a series of 1-2s, and cutoff point for that is there, and that we have maybe an imminent third wave acceleration coming our way. If that's the case, I'll take that. Fabulous. Or we have wave 1. You can see 5 waves up off the low there. Or we have wave 1 already complete, and we are moving into a second wave. The decline so far off this week's high seems to be pretty small scale, even in comparison to the previous 2 declines. So I'm going to stick with the, let's say, the more bullish interpretation on this one for the moment. So that kind of still hangs in the balance. Maybe we're still moving into a third wave. So I'll show you here on the hourly chart what I'm thinking here. We had that long, back at the end of January, we were still working with that 1 and 2 pattern, then we accelerated higher into a third wave. And here is where our alternate count will come in. That's either wave 1 of 3 or it's wave 3 of 1. If you can wrap your head around that. I'm going to move that up by 1 degree also. Change color. Forgive me here now. I should have had this done before, but I didn't. And that's my excuse. Okay, so we could have 1, 2, acceleration wave 3, correction wave 4, and rally up to wave 5. It does. I mean, the trend channel is perfect for it. The price has, stuck within that trend channel. We have traced 5 waves up, so there's nothing. I have nothing against, let's say, this alternate count. I'll move it up again by 1 degree. Excuse me. So I have nothing against that alternate count. The idea would still be that we would correct, let's say, back towards that 104, 104.40 level, and then accelerate into a third wave, a larger degree third wave, which would again probably take more time to kind of work its way higher. The count that I'm working with right now is kind of exploring the possibility that we have a series of 3 1-2 patterns. So we've got 1-2 in green, 1-2 in blue, and then 1-2 at the lower degree in pink. So if that's the case, then we'll accelerate higher later today, most likely. If not, definitely by Monday evening, we will have moved into a third wave. So that'll be wave 3 of 3 of 3. Let's say the first signal that that's not going to happen would be if this move is just wave A of a larger wave 2. So then we'll probably push towards that lower trend line. Then we'll kind of correct higher and then move lower again. So we'll know by Monday evening whether this alternate count is the way to move on this. Then we'll still have a larger 1-2 pattern in place off the low, and we will probably by the end of next week be looking for an acceleration to begin anyway in a third wave. So today is it would be an interesting day, I think. Will probably go a long way to deciding between these 2 main wave counts. I think the turn in the dollar is beginning, and I think the heavyweight against the dollar is pretty much a tell on that one. And this would be a real, let's say, screaming, flashing red signal for risk assets in general. So everything else, foreign currencies, the stock market, even commodity markets, even Bitcoin or any of that stuff. This would definitely be a flashing red signal on that one. Okay, So let's move on. We have stocks still have this ending diagonal pattern moving towards a high. This week's action did cool off a little, and it came in just as we hit 2 fib level targets. So, you know, we may be there. We're close. I know that for sure. Whether we have the actual top in or not is will be probably sorted today. I mean, if we break to a new high today, then obviously we don't. Okay, so everything. Let's say every underlying or let's say stochastic indicator within the market, with the internals of the market, this sentiment surrounding the market, are all pointing towards a multi-decade high in place pretty much right now, with the very large and looming scenario of a trapdoor about to open under the market. So it's so similar to last February. I remember talking about this last February. You can go back to the videos of last February and early February and late January. We were in pretty much the same kind of let's say dead sailor moment where that fella ain't gonna fly. He was about to drop, and it came crashing down pretty quickly. I think we're pretty much at one of those moments again. The same flashing red signals are flashing red here again, as were early last year. So, although now we are in a worse position, let's say, to deal with anything that may come. Okay, so let's move to the hourly chart. This is let's say, the final move within the ending diagonal that I'm looking at here. This week we only traced out 3 waves down, but today we've only traced, in the futures we traced out 3 waves up. So either we put up or shut up now today. It's time to either trace or to push that new high and then close out this final wave 5, or just stick it and start moving lower to call the top in. I think if we break out of this rising wedge here, that probably will happen about 3,500. If we break 3,500, especially that wave below, that sits at 3,500. So we break below 3,500, start running for the door. If we break 29,666, interesting finish to that. Then you should have the door shut behind you. You may even, it'll shut pretty quick once the top comes in on this, and the algos get, wind of the market actually turning. They'll be pretty quick to shut the door behind anybody who wants to get in on or who wants to sell out, because they'll have already sold. So there's nothing much to report, given that we haven't any move to the downside to report on. Next week will be an interesting week. That's for sure, I think, on this one. Okay, I'll leave it there, I think, because I don't really have much to, apart from the pattern itself, I don't really have much to add to it. Oh, yeah, the fib levels that actually came in this week, the market stalled where wave C reached 100% of wave A, so that's an ABC move up in wave 5. So that was interesting. The market stalled right below that. The market also stalled where wave 5 in green, reached 50% of wave 1 in green. So wave 1 is all the way back here. That was that real acceleration of the November lows. Wave 1 up into, what was that, November 9th high. So that was, this week we hit 50% of that. So you would expect that kind of in an ending diagonal, as you see here on the 4-hour chart, wave 1 up, wave 2 down, wave 3 up, wave 4 down, wave 5 up. The ending diagonal kind of has that fib relationship as well. The internal wave 3 is just about 62% of wave 1. and the internal wave 5 is hitting 50% of wave 1 now. So there's kind of declining momentum along with the declining kind of fib targets for the internal wave structure. So that's, it's good. It all points to the same thing, although we haven't got any turn yet. So that's caveat on that one. Okay, so gold, we broke to a new low overnight. So that was a new, I think, 9-month low. So wave C is in force. What was it, last July? We equaled the lows of last July, so the wave count is working pretty well in gold right now. Although, here's the point: the lower we go, the more bullish I get. That's the way this contrarian mind works. The higher it goes in stocks, the more bearish I get. The lower it goes in other markets, in gold, for example, the more bullish I get. Now, I'm not saying that we don't get a new low in gold. We most likely will. We will likely get. I think at this stage we'll probably push at least into the lower trend line here. So we'll push below 1700. Probably push below 1700. Just depends. It all depends on how the excuse me, the pattern that this final C wave takes. At the moment, we have 3 waves down in A. We have a running flat wave B, so that's 3 waves in wave B, and we have a pretty impulsive move lower in wave C so far. So you would expect that this will extend out or develop into a larger 5-wave move, as you would expect in wave C. But I'm not like the move at the correction in wave 4 has been so damn complex so far that there's no reason to say that it won't, continue to remain complex. So it may not be a 3-3-5 pattern. It could be a 3-3-3 pattern. So 3-3-3 is still on the cards here. We have slowing momentum to the downside. Definitely on the daily chart, we have a higher low in momentum. That doesn't mean we don't push lower in price. It just means that the decline won't accelerate as much as you might expect into a C wave. We have that long-term channel. We would probably hit that long-term channel, let's say, with a break of that 1700 level. So somewhere around 1650, we'll hit that long-term rising channel. On the 4-hour chart, we'll hit the declining channel somewhere around 1700, low 1700s. So between 1650 and 1700, I think will be it'll be a good, or it'll be very close to the target for a low in wave 4. So it'll be time to get ready, I think, on that one. On the hourly chart, you can see that I'm still tracking a wave 1 down into the January low, running flat wave 2 into the February high, and then off that February high, we've got for the last let's say 10 days, we've had 5 waves down, I think, complete at the overnight low. So we may see another second wave, a 3-wave rally over the next couple of days. That'll probably, I'm looking at that to hold below 1800 before we decline into an acceleration in wave 3. This is up for grabs, I think, today, because it depends on how we parse this move off the high. We could already be declining into that third wave, that third of the third wave. But that should be decided today. I think we should know by tonight whether this larger wave 2 is the scenario to kind of pin our hats on. Okay, let's move on to crude oil. Crude oil came down nicely off the high. You can see this trend channel that I've been tracking. We kind of tagged the upper line and then we came back down through it today, or well, I'd say mostly yesterday. So it looks like a pretty impulsive move, and we may be tracing out off the high, a 1-2 pattern off the high. So I think later today, if we have 3 waves up complete later today, then Monday we'll see a further acceleration lower to break that 57 initial support level at the previous 4th wave. Okay. Let's move on. The S&P, we have the price tracking that upper trend channel line, and we pushed down through it this week. So interesting. We may not have the final high in for the S&P. I'm going to lead with that because I've been looking at that target up at 39.85. That's where where wave 5 in blue reaches 162% of wave 1 in blue. So wave 1 in blue is all the way back in early March, early April, off the March lows. So we're close to it. I mean, maybe the top is in. The decline so far has been relatively corrective looking. But let's see. We'll go into the short-term chart, and I'll show you how this could be viewed in an impulsive move. Okay, so here's the hourly. Yeah, here is the devastating reality, let's say, of the rally over the last 3 months. So you can see on the momentum, both MACD and RSI are actually breaking lower, breaking to negative territory, even at a new high, after a series of significant lower highs off that November rally that spiked up to a new all-time high, topped out on the 9th of November. So after the 9th of November, we've been doing nothing. Well, we've grinded higher, but we've doing nothing but slowing the momentum. So that's a warning signal for you there. Here we have the move off the high in the hourly chart. You can see here I've been tracking a wedge pattern for wave 5 in green. So we have a triangle wave 4, and then 3 up in 1, 3 down in 2, 3 up in 3, 3 down in 4, and then this final move here can be 3. You could also count that as 5, but for the moment it suits for the wedge pattern that you can see here by those trend lines. It suits as a 3 pattern. So you can see wave A, B, and triangle wave B and wave C. Here's the 162% fib extension of wave 1 in gray. So this is wave 5 in gray of that. It'll be an expanding wedge, you call it, or expanding diagonal, or expanding wedge, whichever you want to call it yourself. So that came in at 39.30. And we seem to have kind of stalled head and shoulders around that 39.30 level. We'll have to see 3 waves up in the futures this morning. We'll have to see if we rally again today. I mean, it's a chopping process. So I've given up pinning my hat on tops until we get a more significant move lower. Now, for the moment, short-term support lies at 38.28, and then the more immediately pressing support will be 36.66. But that'll be the previous 4th wave. So if we break 36.66, you should start getting worried. Okay, so the wedge is filled. We have 5 waves up. We have internal 3-wave patterns. We have a move off the high. We have significant. Actually, here you can see wave 5 in blue here. So wave 1 in blue is the initial rally off the March lows of 2020. So wave 5 in blue has almost reached 162% of wave 1 in blue. And that would be this week. And also wave 5 in gray here, so that'll be wave 5 of wave 5, has just topped out at 162% of wave 1 in gray. Wave C and wave A, I think, pretty much reached equality, if I'm not mistaken. Let's just get a marker on that. No, equality would have been a little bit above us here, but for the moment, we're still tracking that. We're still holding, let's say, I know the price may be rising, but we're still holding within that wedge pattern. And this would be a pretty bearish wedge. So let's see if we get a turn today. Maybe we do. If this is 3 waves up at a small degree, maybe we get a turn down into a third wave. We'll see. And I'm just going to close it at that before I say something stupid. Okay, so we have an impulsive move. This is silver. Wave C is still expected in silver, just as it is in gold. Silver, actually, there's a pretty significant bearish non-confirmation in, or let's say, yeah, in against silver and gold. The two precious metals are kind of battling one another. We have, we're still holding a pretty significant kind of central kind of tendency within silver over the last, you could say, 6 months. We're still kind of sitting at that 27 level today without eking out a new low, which we did in gold. So silver is kind of, I think it's been buoyed by the Reddit group, basically. We'll have to see if they sell or not. Okay, so I still expect that silver will roll over into this C wave, and gold will rally out of the trough before silver follows it. I think silver will be a laggard on this one. So you can see here I've got a wave 1 and wave 1-2 scenario still in play here. Excuse me, my general physical shape is kind of tanked over the last 6 months. Maybe we move into the summer months and I get some of that gut off me. But it's sticking with me so far. But it's winter still here. I don't know. I would show you outside, but it's peeing down rain out there. It's not something to look at. You can see here. Anyway, back to silver. It is still a 1-2 pattern. I think we either have that wave 2 peaked, or we are tracing out. Or we traced out an expanded flat wave B, and then we're moving up in wave C. So this could still be wave C of 2 to close out somewhere around 27.90 again, and then we move lower next week. I can't discard the fact that gold has moved to a new low overnight, and silver seems to be somehow shunning that. So I think we're in some sort of a false rally here in silver, or a false high, or false hope in silver for some reason, and I think we will be. I think that'll be brought to bear probably next week when silver does finally roll over, and when we hit this third wave down in wave C, I think we'll start. If you go to the 4-hour chart here, we'll most definitely take out 24. We'll probably push towards 22 in wave 3 down before we correct. I would expect 5 waves down in wave C, so we'll get an acceleration lower in wave 3 of C down towards 22. We might bounce along support here at 2160 in wave 4, and then we'll crash, I think, below that in wave 5 of C of 2. And then we'll be ready for some action to the upside, I think, in silver. But for the moment, gold is leading the way on the downside. I think gold will lead the way on the upside, and silver will be a laggard on that one. Okay, I'm going to jump Bitcoin because that's really destroyed my head over the last while. I'm going to move something in FTSE. Here's something interesting to look at in FTSE. I think you can say that we have 5 waves down in FTSE done, and the fact that we have this channel filled to the upside, we have a pretty clear A, triangle B, acceleration C done, so an ABC up, and then we move lower again late this week. So we filled the trend channel, we push towards the 78 retracement, and then we move lower. So we have an internal B wave, let's say a 64.80, we'll call it 64.79. If we break 64.79, that will indicate that maybe we're moving lower into the third wave. The German market is buoyed for some reason, God knows why. We may have one more high. This is the wedge pattern, pretty similar to the US stock market. So we have a 5-wave move higher within this expanding wedge. The market has tracked sideways since early February. So the last 10 or 11 days, last 2 weeks, we've pretty much just tracked sideways. So it could be the final ABC up, and this is wave B of 5. Excuse me, wave B of 5. So we have a rally in wave C, maybe to push that upper trend line, and complete a wedge in wave C of B in the DAX. The Nasdaq is interesting in a sense that we have a more, let's say, significant or more impulsive move lower in the Nasdaq this week. So, and this morning in the futures, we seem to be completing 3 waves up. So this could be a 1-2 pattern in the Nasdaq. Maybe we get tech stocks moving away, moving lower ahead of the more traditional indices. So I would watch the Nasdaq, I think, for a turn maybe next week. Especially if we put in a lower high today on Friday, that is Friday the 19th of February. So here we are at February high, slowing momentum, horrible internals, just like a February that I remember from 12 months ago. Okay, that closes out this week's video. Thank you all, guys and gals on the website. Blessings to you all. Shalom to you all. We'll see you all tonight for tonight's update, and you guys out and gals out there on the interwebs. God bless you all too. We will see you next week again, and hope you have a productive and blessed week ahead of you. Okay, I think that is us. We will see you on the far side. Okay. Shalom. Bye-bye.